Hello, it's Aussie Dollarman here, and welcome to another episode of the Forex Form Guide, where we take a look at the major currency pairs each week through the lens of WD Gann analysis. If you're new to the channel, welcome. It's great to have you here. I've put together a playlist of videos that you might find useful in getting started, and if you do find value in this or any of my videos, I'd really appreciate it if you could click on the like button and leave a comment. It does help me to grow the channel. And if you'd like to keep up to date with my videos, I tend to post once or twice a week. You can click on the subscribe button and click on the bell icon and turn on notifications. Before we get started, I'm recording this on Saturday, the 21st of June, just after 1 p.m. Sydney time. So we're basically right bang on the June solstice, which is the shortest day of the year down here in the Southern Hemisphere. If you're in the Northern Hemisphere, then obviously it's your longest day of the year. I hope that you enjoy it. Why do I mention this? It's because if you read through WD Gann's books and courses, specifically his stock market course, you will notice that he does talk about these specific dates. He calls them seasonal times, and he says that they're dates that we should watch in the market. Write down these dates and go back over your market and just have a look each year at these key times and the midpoints between them. So for example, the midpoint between the 20th of March and the 21st of June would be early May. Midpoint between June and September would be early August, etc. Have a look at the dates. Have a look how often they give you turns on your market. So let's get into things. In this episode, we're going to take a look, as usual, at the Australian dollar, US dollar, the pound, the euro, and the yen. I tend to spend more time on the Australian dollar because that's the one that I do all of my work on, but we will be looking at the other currencies as well. It's good to keep an eye on a few different markets, especially similar ones like this, because sometimes you'll see a very clear, clean setup on one, but it's not quite there on the market that you're following. So that can A, give you a guide as to the overall market direction for both of them, and B, give you an additional trading setup that you might not have seen otherwise. As always, a quick disclaimer, this video is for educational and informational purposes only and should not be considered as financial investment or trading advice. Bottom line there, do your own research. This is not financial advice. Trade responsibly. So let's kick it off with the Australian dollar, US dollar. And if you're new to the channel, this is the approach that I like to take when I'm studying any market, and I'd encourage you to do the same. This is a chart taken from page 46 of Gann's second book called The Wall Street Stock Selector, and it shows Gann lining up the charts side by side, so yearly, monthly, weekly, and daily. The idea being that if you're following, say, a big swing, you'll get early warning indicators on a smaller chart like the monthly. And on the monthly chart, when you see a move shaping up, you can have a look at the weekly chart to fine tune that. I like to look at the monthly, weekly, daily, and 4-hour charts. So I've cut off the yearly chart and I've added the 4-hour chart there. I also find I prefer to look at them this way, going a little bit more horizontally. I find if I try to put 4 charts, 1, 2, 3, 4 side by side, they're a little bit too steep. And I just find it easier to look at the market this way. So monthly up the top, and then weekly, and then daily down here, and 4-hour over here. Now, as you can see, our monthly upswing has slowly been petering out here. We've really hit a snag at this level, around that 65-cent level. We were there in early May, the 7th of May, which interestingly enough is the midpoint between the March and June seasonal dates. But since that time, we've really gone nowhere. May went nowhere. June has gone nowhere so far, although I think that's about to change in the week ahead. More on that in just a moment. But that's what our monthly swing chart looks like. If we break that monthly swing down into the weekly swings over here, you can see we put in a higher bottom here in May with our May low down here. So there's the daily chart there. There's the 12th, 13th of May low down there. That's that weekly low. Since then, we have run up. We've basically retraced 62.5% of that run down there. And as you can see, last week was an outside reversal week. We opened, we ran up, we just fell agonizingly short of that 62.5% retracement level, and then we've come down and we've closed below the low down here. Now, that is a contracting up range on the weekly chart. That may be the end of this monthly swing. I thought it would go a fraction further. I've been hanging out for that to just go a little bit higher up and hit some really strong price levels up there. It hasn't done that yet. There is a chance it will do that this week, and I'll talk about it. Looking at the market over here, though, you can see obviously that's an outside reversal bar on the weekly chart. It's running down there. That's all one daily swing so far. So a little bit of an inside bar, and then down bar, little inside bar, basically a down bar over here. So what will be very interesting is to see what happens on Monday morning. I'm not in this market at the moment. If you're following the channel, last week I was in a short trade, ended up getting stopped out for a little better than break even, made a small profit on there. But generally speaking, in a sideways market like this, if you get through this unscathed without taking a loss, you're doing really, really well, because they're awful times to trade. You'll get a lot of false signals and you can burn up a lot of capital trying to force your way into a market like this. I have bigger picture dates that I watch, and I'll have a crack around those dates. But generally speaking, other than that, I'll tend to leave the market alone. In a moment, I'll tell you the next few dates that I'm watching. That's coming up in just a moment. But looking at this, just from a swing trading perspective, there is a chance that that is the top, okay, and that I've missed the top here and that we are going to be running down. I don't think that's the case. Regardless, whether that's the top or whether it's almost the top, I think we are going to see a run up this week, whether it gives us a lower top or whether it pokes its nose up above those old tops and just hits that level, that 65.56 level that I was looking at. In my experience on the Aussie dollar, it tends to hit the levels rather than fall just 1 or 2 points short. That's why I'm suspicious of it, and that's why I had my orders just above there, but we'll wait and see what happens. If I have missed the top, it's no big deal. Often, you'll see on the daily chart, it'll run down, then it will run up and give you a lower top there, and that can often be a cleaner and better trade to take anyway. And I think that's what we're going to see this week. We're going to see a top this week. It'll either be a lower top like that or a higher top, but there'll be a top, and I'll be looking to short it, and I'll be looking for this market to run down for 3 weeks from there. I'm not saying it's going to be an earth-shattering drop to the downside. I don't think that's coming until September, but anytime you get 3 weeks of downward pressure on a market, it's worth having a look at short trades and seeing what the market has on offer for you. Looking at this daily downswing here, you can see if we break that down into 4-hour moves, we had one and then a second leg down and a third leg down. Gann says often the third leg is the end of the move if you look at his sections of the market work, but that sometimes there is a fourth section down. So this is potentially a fourth section down in that daily swing there. It may be the double bottom. That may be the end of that fourth move down there, but I'm having a look Monday, Tuesday, Wednesday to see what happens on this market. I'm expecting it to run up. We'll see what it does. We'll get a run up somewhere, whether it's from here or a bit lower down, but we'll get a run up. We'll see the pullback there. And then once you get into that second leg and third leg, potentially after that, you start eyeing a potential top wherever that may be, and the numbers will all come together. If they all come together, you can take a trade. If they don't come together, you just wait for that next opportunity there. Now, the next date that I'm watching on the Australian dollar, firstly would be a June 26 high, and then running down to a July 19 low. So we're looking at about a 3-week run down there. Now, this is a slightly larger cycle than the one I normally talk about on this channel. And as I said, it may not be the strongest move, but that's what I'm looking at there. And that's the downward pressure that I see there running down for those next few weeks there. Then out of that July 19 low, I'm looking for a run up into a late August or early September. I think it will be early September high. And from that point, I think we'll see the strongest move of the year. I think we'll see it run down all of September, and it'll be a nice, strong downtrend on the Australian dollar. What I'm trying to say is I think it will be a very big down move. So what do I do with this information? Well, that's a bigger picture cycle. I use my smaller cycle, which tells me to expect a high on the 25th of June, which is about Wednesday. So I'm looking around there within a couple of days either side of that. So in the early to middle part of the week, I'm expecting that we will see a top here, and I'll be looking to short that and seeing what happens. If you can get the top and you can get in close to the top and take a short, it doesn't matter if it doesn't go down strongly or a long way. You still have that 3 weeks to let the market run and see what happens there. But that's my forecast for the Aussie for the next little bit. If you're wondering where those cycles come from, you'll find them in Gann's novel, The Tunnel Through the Air. They are heavily coded though. Gann doesn't make it easy for you. There's a bit of work that you have to do to extract them from there. But if you want to get started, you can find the Tunnel Through the Air audiobook on the channel, and you can listen to the entire novel there chapter by chapter. But that's how I see the Australian dollar. I see a top forming this week, and I see the market running down to the 19th of July. Moving on to the British pound now, you can see we looked at this last week and the monthly chart hasn't turned down yet. On the weekly chart, we had a little bit of a down week last week, as I thought we might have, a little bit of a pullback there. On the daily chart there, you see here, that's the weekly over here. We've had 1 week down there. This move, that's all been one daily swing on the daily chart there. So technically, if we get a lower top here, I'd be expecting that market to run down. But just keep in mind, this is still what I would consider to be a sideways market, and it's not until we break this low here that I would say that we're in a downtrend on the pound. So it is still a little bit messy. It can still go a little bit higher here. Or, like the Australian dollar, we may go down for 2 or 3 weeks, have that bit of a pullback, and then go onto those price levels that I was discussing last week. So if you missed last week's episode, around here, high 138s, low 139s, as a nice price cluster on the British pound to take a look at, and where I think a top may come in. Now, again, on the big picture, I don't think that's the end for the pound. I think that there's more upside in it. But whenever you see a group of price milestones all nice and close together like this, and you see the market stop at that level, which firstly is a big 50% point there, you can work that one out for yourself where that comes from. But it's a big 50% point. If the market does stop there, you'd at least expect a decent trade out of there, several hundred points, if not 1,000 or more. So it could end up being quite a profitable trade, whether it's a yearly top or whether it's just an intermediate top like a monthly top pulling back. And I think it's likely to be that. I think if we go back here, you can see on the monthly chart, big swing up there. We've cleaned out these tops here, big expanding range. At some point it will pull back, but I'd be looking then for a higher bottom on the monthly chart, and that just gives you two potential trades. You've got a potential top and potential short trade on the way down, and then if and when it puts in a higher bottom, you can start looking for low areas for potential long trades. That's down the track though. If it is going to be a monthly higher bottom, that even if it takes 1-2 months there, that's still 2 months. That's 60 days or so. It may take a little while for that to unfold. So often, because it's in a sideways move here, people will think, oh, one day down and we've got a little lower top there and bang, let's get short. But you just get that little pullback and then it runs up and kicks off to the upside. Hard to tell here. As I said, I think that the final pound price is a little bit higher. We'll see what happens with that. You also have to remember at the moment we're kind of on the brink of World War III. I know it sounds over dramatic, but it's not that far off with what's going on between Israel and Iran. Based on my very limited understanding of geopolitics, should the US enter this conflict on the side of Israel and then Russia decide to enter on the side of Iran, it could trigger a very fast chain reaction where all of a sudden more countries join in. And that's how World War I and World War II started, basically, in a nutshell. They didn't just start overnight where it's all peaceful and the next day you wake up, oh, we're at war. It was just a series of dominoes that fell, and eventually the world sort of stumbled into a war, and it's a little bit scary. And I've got a video in mind, and I'll put that up in the next week or two. Hopefully, I've been thinking that for the last couple of weeks. But for those of you who have the book Astro Cycles and Speculative Markets by Luther Jensen, have a read of chapter 5, which is page 12 of the book, so very early on. And it's the Uranus cycle, the planet Uranus, which orbits the sun every 84 years. If you look at the current year, 2025, go back 84 years and you get 1941. What happened in 1941? It was the middle of World War II. The Japanese attacked Pearl Harbor and the United States entered World War II. So that's pretty significant. And Jensen talks through all of that in that chapter, and we will have a look at that in a little bit more detail in an upcoming video. If you go back another 84 years, you get 1857. Now that's a little early, but it was at the end of 1860 when South Carolina seceded from the Union. So we're looking at the Civil War in the United States there. So if you go back one orbit of Uranus, you've got World War II. You go back another orbit and you've got the US Civil War. If we go back another 84 years, you get 1773. Now, 1776, July 4th, 1776 is when the Declaration of Independence was signed. So you've got a Revolutionary War, followed by a Civil War, followed by a World War. These are all pretty momentous times in the market. Now, Jensen links them to the 8th and 9th degree of Uranus in Gemini. We're not there yet, and we won't be there until I think it's next year sometime. But we could just be on the cusp. We might just be seeing the early rumblings of these things before they come into effect. So it's sort of a little bit of a scary time in the markets based on that. But we'll go into that in a little bit more detail. But if you do have the book, it's chapter 5, page 12, of Astro Cycles and Speculative Markets by Luther Jensen, who many people believe actually worked for Gann or with WD Gann and was doing the same sorts of things. Now, looking at this style of price forecasting, I learned how to do that from Safety in the Market and from their Active Trader Program online training. So I'm not going to go through and teach all that. That's Safety in the Markets material. You can have a look at that for yourself. It is something that I recommend. It's one of the few Gann courses that I do recommend. You can find some of that information, but not all of it, in Gann's book, How to Make Profits in Commodities, which you can get from wdgann.com. Now, I have no affiliation with wdgann.com, but if you are looking to order some stuff from there, have a chat to Cody, who runs things over there, and just tell him all the stuff that you want to order, and you may find that he'll put together a nice package discount for you. He did that for me recently as well, so a shout out there. Thanks, Cody. I appreciated that. And that's the original source of Gann material, Lambert Gann Publishing. Gann sold the business to, was it Ed Lambert? And then afterwards, I think it was Nikki and Billy Jones bought it. And Cody is the son of Nikki. So that's where he fits into all this. But I've ordered all my original stuff from there in the past, and they've been very, very good to deal with. All right, moving on to the Euro US dollar now. Looking at the charts there, you can see it was a little bit of a pullback last week, but not much. You can see the market opened just below the previous week's close, ran up a little bit, ran down a little bit, and then it's closed basically where it closed the week before. On the British pound, interestingly, we have had a down week. We haven't seen that on the euro just yet. And if you look at this move up, that's one section up, say, to this larger run up here, pullback, and then pretty much an equal section to that next run up there, and pretty much an equal pullback there. So again, it wouldn't surprise me to see a little bit more upside there. I did pinpoint this 119.17 area in last week's episode of the Forex Form Guide. You can have a look at the charts here and have a play with those numbers for yourself if you wish. But for me, it's just a question of if and when the market gets there. You can come up with a price forecast, and sometimes the market will get there, the same day that you found it, but other times it won't get there for a few weeks or even a few months. They just sort of sit there, and you put them into your alerts or into your calendar or into your memory on your whiteboard, however you track these things, and then you just see how the market looks when it gets to those levels. My rule in trading something like this is that I don't like to trade against an expanding downswing. See this daily downswing here compared to the last swing down there? That's expanding there, so I wouldn't be trying to buy out of there. I'd be looking for this market to give us a failed downswing first. It can be a little higher bottom, but a failed downswing before even considering buying something like this. So a little bit of limbo there. But that's a slightly different picture to what I'm expecting on the Australian dollar. I can see more upside on the Aussie dollar. I do think we'll have a little bit of a pullback first, though. This one, I can go either way, whether it runs up from here or whether it has a little bit more of a pullback first. I think it'll have a little bit more of a pullback first. Now, on the Australian dollar, I'm looking, as I said, at early September for a top there. I don't have a final price there, but that may, on the euro, that may correlate with the Australian dollar top. Now, as I said, I'm expecting a big crash on the Australian dollar in September. I'm expecting a very strong down move. That doesn't mean that the pound and the euro have to follow suit. There are reasons for that. They have to do with the law of vibration, but that's a discussion for another day, and to be fair, not a discussion for YouTube. But my point is, I'll be looking at that level. I don't care when it's hit. If it gets hit this week, if the market spikes up, which it's not going to, I don't think, but if it spikes up and hits that level, I'll have a look at it because there's a strong group of milestones all at that level for a potential top. But if sort of the euro hangs around a little bit and gradually works its way up, well, it's only a couple of months away, just over 2 months, until we get to that late August, early September period. So if we're approaching that area and we're up around that 200% level, and if that's all one monthly upswing, I'd say that's a great place for that top to come in and for a pullback on that market. And as I said last week, even if it's only a 50% retracement there, it's still nearly 1,000 points on the euro. So you can imagine if you build your price forecasting skills to the point where you can take a trade with only 10 points of risk, and you can get into a top trade like that, even with, say, 20 points of risk on the trade, and the market's got 1,000 points of movement in it, that's a 50-to-1 reward to risk ratio just on your initial position. And that's not including any compounding that you might do along the way as well. So on the euro, as I said, I think more upside there. I think there's probably a little bit more pullback first before it's time to get long on the euro for that next section up there. It's just a question of how far and how long it does pull back. Let's finish off with the US dollar, Japanese yen now. Basically, this is the same chart that I showed you last week. All it's updated is the price bar, so we've got an extra week there. As I expected last week, we did have an up week on the US dollar yen, so that's nice. If this is going to have any legs at all in it, it needs to break above that 37.5 there. If it can do that, I think it's going to at least 150, 151, up around here somewhere, and then we'll see what happens with that. On the monthly chart, we've got a lower top there, and then we've got these triple bottoms here. As I said, I think at some point these are going to be broken, but this is on a monthly chart. Looks like it's going to have a little bit of a pullback first and then come down and take out those lows. So when it does, that could be a ripper of a trade as well. This is where the market was in last week's episode. I noted, looking at this range here from the April low to the May high, we pulled back to 75, we pulled back to around that 62.5%, and then we sat around that 62.5% retracement. That's where we were last weekend, and I said it looks like we're climbing the stairs there, and I'd be looking for a higher bottom above that 50%, and that's come in on Wednesday this week, that little higher bottom. It's only just broken the low there, so it only just counts as a higher bottom, but it does technically on your swing chart count as a higher bottom, sitting right on 50% there. And then we've gone up a little bit from there. This one over here, this ranges resistance card over here. By the way, ranges resistance cards you can learn about in section 2 of Gann's book, How to Make Profits in Commodities. But this ranges card that I'm showing you here on the 4-hour chart, that corresponds to this move over here as well. So as this move was taking off, you can see we made a higher bottom there. We were climbing the steps as well on this smaller ranges card, higher bottom there on the 62.5% milestone, and then again just above 50% and 37, and off we go. As I said last week, they are really powerful tools and they are worth watching on your market. They won't always work at every top and bottom in the market, but when you see the market vibrating, for want of a better word, around these milestones, it's definitely worth keeping an eye on. Finally, we'll take a quick look at the economic data that's due out this week. You can see Monday evening, Sydney time, there's a whole bunch of manufacturing and services PMI data coming in that may be important to watch. And then on Tuesday night, you've got Canadian CPI figures coming out. At the moment, inflation and CPI has been a really important point that markets are a little bit obsessed with. You've got a couple of heads of central banks speaking, one in Britain and one in the US. But it's that Wednesday, 11:30 a.m. that I'll be watching very, very closely. As I said, I'm expecting a good turn on the Australian dollar. I think it will be a top in the middle of the week, around that 25, 26. That is a place that it could come in there. Obviously, it could also come in at midnight on Wednesday night when Fed Chair Powell testifies. But those inflation figures, that will be really interesting. If they're out by a bit, one way or the other, it could see a really good turning point in the Australian dollar and a decent move happening there. I'm not saying the market must have a good, strong move, but all I'm saying is that there will be downward pressure for those 3 weeks into around that 19 July low. So I will be looking for short trades there. Now, if the market is going choppy and sideways, I'll leave it alone. If it's not really pushing strongly to the downside, or if it starts running up there, I'll obviously back off and wait for that next date to watch there. But that's how I see it at the moment, 3 weeks down from that top. US GDP numbers come in on Thursday evening, Sydney time at 10:30 p.m, as well as the unemployment claims. And if the CPI figures don't move the Australian dollar, this one might, because last time the GDP quarter on quarter was negative, and it's expected to be negative again. So if we have 2 consecutive quarters of negative GDP, well, that technically is a recession, and the markets aren't going to take that too kindly. And if the US goes into recession, people, I believe, are going to sell off the US dollar. So you'll see a bit of a down. I'm not saying that's why the Aussie dollar will be going down. The Aussie dollar, I expect it will be going down. I've run those cycles over the entire history of the Australian dollar. When I say the entire history that I have, which is about 32 years of history of price data on that market. I've run those cycles over that time, and they don't disappoint. Occasionally, you'll miss an inversion or you'll get a sideways period that's a little bit tricky, but they do work, and I'm expecting that to run down, and that's the cause. It's not the GDP announcement. It's just that the announcement happens to come at the right time, whether it's the CPI, whether it's the GDP. But those cycles you can find in Gann's novel, The Tunnel Through the Air, if you take the time to read through it, to listen to it, and to decode it. So an interesting week ahead. As I said, September is on my radar, but you can only trade what's in front of you, and it's the middle of June, and I'm looking for a top on the Australian dollar. If you missed it, I did put up a video called A Step-by-Step Plan for Gann Traders that actually works. That's 12 steps to walk you through being a profitable Gann trader. I'm not saying it's going to take you from zero to hero in 90 minutes, but it will give you the 12 steps in the order that I recommend that you follow them. And if you're Gann trading, or if your trading in general is not where you want it to be, there might be some stuff in there that will really help you get it back on track. So there's a video I'd encourage you to watch when you have some time. That's all for this video. Again, if you are new to the channel, welcome. I have put together a playlist of videos just for you that I think will be helpful for you. You can find that at the top of the channel. And again, if you do find some value in the videos, all I ask for is a simple like and a comment, or you can even go through and like a comment if you like someone else's comment, but just engage with the video a little bit. It does show the YouTube algorithm that there is some interest in the video, and it will then push that out to other people. I believe in this message. I believe in what WD Gann was trying to teach us all. I think there's a lot of value there for us personally, but also as a society as well in understanding these market truths. So if you want to help me spread that message a bit, a simple like for the video and or a comment, or a like on a comment from someone else goes a long way to pushing that out to other people. And if you haven't already done so, you can click the subscribe button and turn on notifications to get an email alert every time a video goes out. That's all for this week's episode of the Forex Form Guide. I hope that you enjoyed it. If you have any questions, comments, feedback, or you just want to say hello, you can do that by leaving a comment below. I'll be back next Sunday for the next episode. Until then, I wish you all the best with your trading, and bye for now.